Hi everyone, it's Sam once again. So in this video, I'm going to be explaining to you how you need to understand price in Forex. So wherever you hear, oh, there is a change in price, or where is currently the price of the market, or what is currently affecting the price of the market, this is basically all you need to understand. Understanding price in Forex. Okay, so now understanding price in Forex includes bid versus ask, pips and spread, and everything you need to know about how price really works. All right, now, so this is bid versus ask. So what do we mean by bid? Bid is actually what we mean, what is known as buyer's price. Okay, buyer's price, the amount at which buyers are willing to pay. Okay, the amount at which buyers are willing to pay. And also ask is also known as seller's price, the amount at which what sellers actually want. Okay, this is the amount I actually want that I want to sell my stuff. Okay, if I'm actually a seller or a trader, okay, I'm talking about shops now. Probably I have a store, I have a mall. Okay, now the amount that I want to sell my stuff is what we know as ask price. So what you need to know is that what you need to do as a trader is that you buy at the ask price. So bid price is what we know as what buyers are willing to pay. So once you are okay with what buyers are willing to pay, then as a trader, you sell at the price that the buyers are willing to pay. That's basically what we know as bid versus ask. Also, what is a pip? A pip is what we know as point in percentage. A pip is actually the smallest price movement in Forex. For every movement that occurs in the Forex market, the change in that movement is what we know as pips. And most pairs, the one pip is always equal to 0.0001 depending on the kind of pair you are trading. All right. And also pips is used to measure price change and profits and also loss. And also, let me break this down. Examples of pips in Forex trading. You see, I said most pairs, they are actually in 4 decimal places. Now watch, this is Euro USD now. For example, if Euro USD moves from 1.1000 to 1.1005, that is a 5 pip increase. For example, this is the normal price of what the Euro USD is, and then it moves to 1 point. So you can identify the change in pips right here. And 1 pips, a change in 1 pips is what we know as 0.0001. So if you add 0.0001 plus 1.1000, all right, multiply by 5 pips increase, that's where you will have 1.1005, which means 5 pips multiply by 1 pips gives you 1.1005. Now JPY pairs, they are always in 2 decimal places. USD JPY moves from 135.00 to 135.20. That's 20 pip increase. Why? The reason is that 1 pip for USD JPY is 0.01. So for us to achieve 20 pips, you need to multiply your 20 pip increase multiplied by 0.01. This is what you are definitely now going to add with the initial price of USD JPY or any JPY pairs. So now what you need to remember is that 1 pip is usually 4th decimal for most pairs generally. But for JPY pairs, you need to understand that it's the 2nd decimal. You need to understand that spread is the difference between ask price and bid price. This is how your broker make money. I'm still going to explain who brokers are, but not in this video. So now, this is actually how your broker benefits from giving you the access to have access to the financial markets. Okay, so the tighter the spread, the better for traders. Spread actually varies by pair and sessions, and I need you to understand that there are different brokers, they have different spread. I have my own recommendations I will recommend for you. In conclusion, one thing you need to understand that bid price is actually the buyer's price. Okay, and ask price is actually what? the seller's price. And also pips is what we know as smallest unit of movement. And spread as well is what we know as the cut that the buyers will actually gain. They need to gain something. Alright. They are giving you an opportunity to trade in the largest financial markets. So these are these things you need to know for you to trade smart. So if you want more daily simplified Forex education, ensure you like this video, you share, and you comment on what actually stood out for you on this video. And then you follow at Forex Fortitude Academy, and I'll see you on the other side. You're welcome.